If you're playing a short-term game in real estate, let's say you're going to buy properties, do renos and flip them. Every time you do a transaction, you're going to get taxed. And whether it's stamp duty or the profits from your sale of the asset, right, is you're continually paying tax. Where if you hold an asset that grows for 30 years, you never pay tax until you sell it. Don't get me wrong, you might pay land tax or you might pay tax on the income that comes from the property, but the capital gains tax is deferred here. Now, what makes this even more interesting, you can actually borrow against that pre-tax. So you've now gained even more leverage and ability to use inflation. So when I think of the people or the way I want to play property, inflation, leverage and tax are going to produce bigger wins overall. And I should say compounding as well, which is the time effect that comes into these. Time is the magic thing here when we start to think long term. All three of these factors are going to produce a much bigger and better result than anything will in the short term. And that's the game I want to play.